Yeah, so we're just going to be looking at NASDAQ and how it has performed throughout the week leading up to basically our NFP. So, I mean, we know that the week started on the 3rd of July. So basically the 3rd and the 2nd was an American holiday, as it was leading up to the 4th of July, which is Independence Day. So that's the reason why we actually didn't get as much momentum from the 3rd to the 4th, which will be our Monday to our Tuesday. Tuesday, we actually didn't have any fundamentals directed to the American market. So that's why it was pretty much of a silent day. But either way, we actually did catch an entry on that day, which was on the 4th. On the 4th of July, we did catch an entry. And we caught this entry around about 4. So this was the 1-hour candle which we caught right here. So if we look at it, so as you know, 4 p.m. it's always our target zone. Between 3:30 to 4:30, that's basically where our target zone is. That's when London is basically giving off to New York, and then New York is taking full power of the markets. By 4:30, they will all be within the market. So let me just trace back to that trade. Yes, here it is. So it was on this hour that we took this trade. It was around about late London session. Yeah, for the mid London and New York. It was mid London and New York. So basically the main confluence behind this is just like the NASDAQ strategy that we know, which is we're just looking to break a liquidity trend. So the thing about it is that there's been a lot of liquidity being created on this level, as you can see. So I deduced that from this movement here, because this is also on a daily order block. It's on a very nice daily order block. We see this level. You see, this level that we see here was basically from the previous week, and it had basically left the market on a high. So once it opened, it dropped back down, and then trying to fill in this gap here that was left from the drop. So it's trying to fill in this gap that was left from the drop, and then it created an order block from here. So now the thing is that there's a bit of liquidity on this level. There's a bit of liquidity on this level, but in this market, this will be our premium and this is our discount. But the market decided to react from the discount and going down. So when I was taking this trade, my main risk was that at least I have it a little bit above from the premium order block, so that I can try and risk just that little bit of capital. So if it would have hit my stops, it was okay. I would have had it tight. So because usually when I enter on the discount, I have my stops very tight, so that if it hits my stops, I know that it's actually going to fetch the premium. So if my stops were hit here, I would have knew my next entry would have been this area here. And then it being that area there, I would have knew that if it leaves that area, then it's out of my trade range. So I would actually leave the market. So that's how I actually deduce my trades. If I'm going on the entry on the discount, I'll risk about 1 to 2%, depending on how confident I am. But if it happens that it does not react from the discount, and maybe my stop losses will be too much of a risk if I put them above the premium order block, what I'll just do is put it very tight. Once I put it tight, it hits my stops. Then I know that, okay, it hits my stops. I'm out. but then I'm looking for another entry on the premium. So when I'm looking for an entry on the premium, I know that that is like the most confident trade I will take. So I'll probably risk about, on average 2% to, if I'm trying to stretch, I'll go to like 3%. Just so that I don't hurt my account. So on this point, once we started seeing this liquidity being built up, I took my risk here by the discount. And I wasn't actually expecting a lot of movement due to it being the 4th of July. But I took this late London trade. So also London will give you an opportunity, tends to also give you an opportunity when you are trading, let's say, when you're trading order blocks, especially in London. If it gives you an order block match by, let's say, late London between your 1 o'clock to 4:30, what happens is that it will take that trade. And then once it takes that trade, New York will just continue what London did, because that was New York's trade as well. So London will just sometimes kick off the trade, and then New York will just carry on. New York will just carry it on. And that will be basically the trade of the day. And that's just how we would take these entries. So we also look at London. So it doesn't necessarily mean that I only trade from 4:30. So I'm basically looking at the market from London, beginning of London, and then as time goes, I can take the late London trade if it presents itself, but if I still don't catch it, it's okay. I can still catch the continuing one in USA. So if USA is basically taking the same direction as London, then it will give me a slight retracement and then give you another entry opportunity into the market. So once we took this trade, we got a double top hit here. Double top hit matching with this order block, with that order there. And then once there we got movement. So I entered the trade around about this level at 15205.4 into the trade. And then I just saw a lot of consistency going into red. So my first TP was the trend line, actually, because usually my first TP will be where the trend line is, because most of my trades are there to break the trend. So the first TP that I take is wherever the trend is, whenever it touches the trend line. And then the rest, I'll probably just trail it to about 25% maximum, 25% from where my TP1 is. That's the maximum trail I can put on a trade, because then at least from that point, I can say that I want 75% of that position, other than me trying to let it go, trying to let it go to like 50%. And then that's actually also entering a losing trade if you end up letting your positions retrace with such huge amounts. It's actually a losing trade, because in general, you're losing capital that you could have had. You're losing profits. So if you see that your market is going to give you a bit of a big retracement, it's good that you just jump out so that you have enough capital to go in on the second opportunity. So once it came down, I closed some positions, and then I trailed to about this candle here. So, and then obviously the market came, it took out my positions, and then around about 5:30. Yeah, around about 5:30, 5:45, I entered another trade. And then the market shorted, and then it shorted slow. So I understood, because there was a lot of actually there was no fundamentals, and the markets were also closed technically. So I understood that the market will move slow. And then one mistake that I actually made on this trade, because this was my second short opportunity. And then I place my stops a bit here. I'll admit that there was a mistake that I made with this trade, and the main mistake was I actually slipped with the position open. So which is something not advisable to do, especially when it's over the weekend. I mean, even now I actually have a NASDAQ trade still open from that sell. But I actually ended up trailing it. So with this one, I didn't trail it at all. And I just passed out. And then the market woke up. It actually came to break even around about 4, around about 4. So at this time I was sleeping. I couldn't see anything. So it actually ended up going my direction, and it ended up selling once the holidays are done and everything. And then the market ended up selling. We ended up hitting even our TP2. Our TP2 was around here. Yes, we ended up hitting our TP2 by that time. So that was the only mistake I would say I made with this trade, sleeping with it open, because I honestly should have woke up earlier in the morning. If I woke up around about actually even 7, I would have been able to catch and enter some more trades. So sometimes it's good to wake up early. I mean, sometimes, you might not get anything early. It just depends. But then at least here we got to sell. So by London session, when London started, the market was already tanking and was already down. Yeah, and then we sold till this point. I closed my entries, retraced, and then it continued selling. So I ended up not seeing this bullish, wish I actually could have saw it. Max, I don't know, did you catch this bullish run? Because I remember you showed me something that was bullish.
No, that was US 30.
Although, but was it a similar move, right? It was something like a similar
Yeah,
move.
it was a similar move. Yeah.
Oh yeah, yeah. I didn't see this entry because it even happened around about late London. Yeah. Yeah, I actually didn't analyze this move since I already ate in the morning. I wasn't able to see it. But like, can you tell us how you saw that one on the US 30? Should I flip to the US 30 chart maybe?
Yeah. You can just go there. Was it bullish? I think it was. I don't think it was a sell. But let's go that side.
Do you think it was because I do remember something bullish. I'm not sure if it was the previous week from the one we just had, or
Yeah, a bullish. Yeah, a bullish position was last week, and
or
then this week.
was or not this past week, yeah.
Yeah, not this past week.
Okay, yeah. Okay, yeah, it might be a mission trying to find that entry.
You did
Um,
wait, but you did catch a bullish. But it was 5 minutes on NAS yesterday.
oh yeah, on NFP.
Yeah,
Yeah,
just on
yeah,
NFP.
that was a very quick that was a
In and
quick bullish
out.
one. Yeah, yeah, that was a quick bullish one. Okay, we're gonna go to that one after this one. Because I remember this bullish run here. Because when I saw it, I was actually looking at the screens while the market was rushing this hard. Just that I wasn't prepared for the bullish. And then what ended up happening was that when I got onto the market, the market it was around about here. So it came to this order block, and once it came to this order block, it came up to the premium. So when it came to the premium, it was testing this trend here, testing this trend, and I saw it losing momentum, and I saw a lot of rejections. So I think me and Lunga actually entered this trade, but I did not send this signal on the group because it was just happening so fast that I ended up not sending the signal on a group. But I remember also Lunga had a position around here. He entered it around here as well. The reversal. I sold until this point. I sold until this point and then I exited the market because it wasn't giving me anything good around about 8:30. So yeah, this was another one, another short position. So with this short position, I was expecting it to come all the way down here, which it actually did. But yeah, the time it took was not, yeah, I did not like the time it took. So if I bring the Fibonacci, I think I only closed about 20%. I only closed about 20% of this trade. No, actually, sorry. Closed about 65%. Yeah, closed about 65%. I mean, which is still good as well. Closed about 65%, retraced. And then, so it was making a slight head and shoulders here. I could have took that sell. But yeah, I think I was already tired of the market at this time. So I didn't actually give it enough attention. So I ended up selling till this point here. So as I remember actually on this point, I was looking to go bullish here. Once it made into this order. I was looking to go a bit bullish for a number of reasons. I saw the market coming down, that liquidity line as well was plotted nicely. I could see that liquidity line. So in my head when I was working on this is that the market already shifted once and then it shifted twice. Now it's in an order block. It's looking to come collect some orders here because honestly, there was no proper formation here in place for this sell. You know, it just kind of moved. There was no proper formation, clear formation. But if we go on the 1 minute chart, we'll probably see a formation. But on this 5 minute, I could not see a clear formation. So in my mind, we're looking to come here, get a proper double top, and then looking for the market to go down. So in essence, from once the market came, this was gonna be my trade, and then we take it more down. And then we take it down. So in this point, it did not want to come back to this level. So this level was already solidified and they had enough orders. So on top here, it was a lot of you would say big firms that caught it here. Hence why it also left without a formation. They caught it here and the market could not risk going back there. They might make the traders there a bit scared, have them hopping out with all of their capital. So at this point, they were just trapping the buyers. You know, they were trapping the buyers. And then we had about, yeah, I think it was in the morning, around about 9. Yeah, I got in around about 9. And yeah, that was gonna be my trade. But then around about 2, the momentum was just too aggressive. It came and then it took out my stops, continuing from this sell, and then it went down. I think Lunga as well also caught the sell from here. He also caught the sell. I remember he sent the analysis on the group as well. So my stops ended up getting hit on this trade, and it went down. So at this point, it was still okay because I was still looking for bulls because I could see that somewhere there must be some bulls on this market. And then I ended up actually catching a bullish trade here. So at this point, the London low was taken out because this was where the London high was. That's where the London high was, and this was where the low was. So when the market came down, it took out the low. Around about when New York came in, New York took out the low, and then we got our bullish run. So it was a bit of a late bullish position at that time. I also didn't get enough time to send it on a group. Yeah, it just happened so quick. So I ended up closing my entries here because I saw the market didn't have enough momentum to go and bully out that London high. So then market just, consolidated straight. And then it was NASDAQ. And then this was when this was when we had NFP. And then on the NFP, basically the market was quiet from the previous day throughout most of London. And what I saw is that there was a lot of volume being created. So it ended up being that there was volume created from both sides. So when volume is created, there's gonna be basically a midpoint where it's gonna be an explosive area. So basically when NFP came, which was around about here, it was creating lower highs and higher lows, which leads us to basically a volume formation. And once the volume came, seeing this rejection here on this point and it going up was a clear sign for me that we could have a bullish reaction. So by this time, when this happened, we had a reaction there, and then we had a pin down, two rays between a pin down. So this was around about 220, and it was leading up to 225. So I sent the signal around about 220, I think it was 227. Yeah, around 227 before the 30th. So once I also saw this breakout, I was like, okay, we could be having a valid movement going up. So I saw that the entries are going to be bullish on this one. So around about 227, I sent the signal. Say the candle came out, and then we were bullish. On this side. So it was around about here where the entry was. It was bullish. And then my stop loss was right there. It was very tight. So this bullish run came out so quick out of nowhere that if you entered after this candle, they had already trapped you. You see, so once I tell you, once the spike has already happened, you shouldn't join the trade on the direction of that spike because you can be getting trapped as well. So we ended up getting that bullish, and then I closed my trade. I closed my trade after this second candle. Closed it around about here when I just saw major rejections. And then I quickly pulled out of the market, and then market came back to where my price was, but it was spiking down as well. So that was the first trade that we had on the NASDAQ. And then there was the second one, which I sent around about 8, if I'm not lying. I remember, yeah, it was around about 8. So I caught a sell, shorted sell here around this area. Once I started to see that, okay, the low was created and they took out the low, and then I could see that, okay, now there's a certain direction that they're taking, and this direction was going up. So that's how they were bringing the liquidity within the market. So when I started seeing rejections and started to see that the London high was actually taken out, so the strategy, once the London high is taken out, we know that the market is gonna basically correct. And I was just going off that theory and strategy. So once it corrected, it came back to where the high level was. I entered my sales and we ended up correcting that. So this only took about an hour. This was just like an hour's candle only. And then it just corrected literally what has been done over the whole day within 1 hour. So yeah, that was our NASDAQ. I think the meeting is gonna end anytime soon. I don't know, did you guys want to discuss about anything else more?
I'm good for now, actually. It's looking pristine.
Okay.